I think that you have to understand what a good strategic asset allocation mix is. That is how to create a good, well-diversified portfolio, assuming that you don't know how to make these buy and sell decisions. Because what happens is, think of it, it's like a poker game, and you're playing against others. And those others are putting in, most lose, most buy at the highs and sell at the lows. Most behave emotionally. Most don't have the same information. So it's a very difficult game. Like I say, you know, you wouldn't think I'm going to go try to compete in the Olympics, but more people think that they can compete in the markets. They think, I think the markets are going to go up or down. And the track records there are terrible for most people, okay, because of those handicaps relative to others. So for that reason, you start off with a well-diversified, balanced portfolio, because diversification can reduce your risk without reducing your return. Well, first thing is you realize that holding cash and dead assets is a bad thing. So a lot of money is in cash because people think that cash is the safest investment. But they are measuring that in the amount of money that they get, nominal returns, and they say it doesn't wiggle much. But think about it. It's lost, as of the most recent statistics, 8.5% over the last, inflation is 8.5%, and they receive virtually no interest rate in cash. And so there was an 8.5% loss of buying power as a result of inflation. And so psychology should change, and is in the process of changing, to realize that you have to think in terms of buying power, not the number of dollars you have. The worst thing is to be in cash. Like I say, cash is trash, and to be into and to be out of the bonds. The next thing is to have a diversified portfolio of assets. The diversification means some assets that are inflation hedge prone. For example, you're better off to own an inflation index bond than a regular bond. I think it's one type of asset. Now, flooding into any one thing is an issue, but moving from the nominal bonds, in which the government just says, I'll give you this amount of money, and it has the unbelievable and unlimited ability to print the money it gives you, it would favor inflation index bonds. And it could be other assets. You know, some people would say something in terms of cryptocurrencies, or it might be those other assets. I think.
What's your take on crypto? So crypto is a huge part of my portfolio. I think you'd be mortified to see just how much so. But yeah, what are your thoughts on crypto?
I think that too much people pay too much attention to one at the extreme of the other. You know, I think that crypto, like gold, is not a productivity earning asset, and it can be controlled by governments in lots of ways. It's been outlawed in a number of places, and it also can be monitored. The privacy element is not secure from governments doing monitoring, and so and the size of crypto is about the size of Microsoft. You know, it's all crypto combined. And so to be overly concentrated in it, in my opinion, is a mistake. But to have some of it is a good thing. So the question is always, what amount of it? So that's, you know, I have a little bit about it. I'd probably shock you about how little I have. You would shock me about how much you have, but having some of it. So And other things I would say is that geographic location is important. In other words, not just all in US and US dollar assets. I would say that the three things that again I'm looking at if I go down countries is first, are they earning more than they're spending? Do they have a good income statement and balance sheet? Because the amount of credit that's going to be available to bridge the gap between spending and earning, cash flows and so on, is going to be quite narrower. So a lot of companies even that were able to raise cash and not have good cash flow because of maybe growth expectations in the future will find it more difficult. That'll be true for individuals, it'll be true for countries. So does it have a good income statement and balance sheet will be important. The second is places. How are they working with each other? Is there civility or is there civil war, on the brink of civil war? Because countries where they work well together, they're productive, are going to have a real competitive advantage. Orderly places, safe places to be,
what are countries on the rise in that? So obviously I'm shocked to say this out loud, but the US would be in a bad place in terms of that. What are places that have great stability there?
Well, there are parts in the United States that are better than other parts of the United States. You're seeing people leave some places for other places. You're seeing them leave, I don't know, to Texas as Austin, or to Florida and so on. So there are differences within the United States and differences from the United States.
So you mean people need to think about picking up and moving and actually going and being in a different place?
Yeah, and those are also the better places economically, because when people do leave, and they do that, those who leave are higher income and higher taxpayers. And as a result, there's more of a hollowing out that takes place in that, which creates an economic problem as well as a lifestyle problem. So I think you're going to see greater differentiation in places, which affects where you want to be and where people who can afford to be there want to be, and also affects what their economies and markets are like. And number three is, are they in a position where they're likely to be in a war, or are they likely to be out of a war? You don't want to be in a war. So, and those places, investing wise, history has shown, do worse because they have to spend more money. There's more problems, more pain that's being exchanged. Neutral countries in wars do very well, as it turns out. So elements of diversification. So it's a long-winded answer to your question, but I would not want to be in debt or cash and those instruments. I would want to diversify well with a bias toward inflation-protected assets. And I would want to diversify between locations, countries, in terms of the investment based on the criteria I've just mentioned.